So, good afternoon, everybody, and welcome to Captain's Table. Very excited to have you all. We have a very big group today. As you're joining, please mute your microphone. Many of you are first-time attendees to Captain's Table because you are finance managers, financial controllers, or on the finance staff at various recruitment companies. So welcome to you if you haven't been to a Captain's Table before. And Captain's Table is our forum where we get together once a month and really get into some interesting and practical industry issues. We source really high quality speakers for you to deliver some great content that normally is not available in the marketplace. And Captain's Table is brought to you with the great support over the years of JobAdder, who need no introduction. We've got Audrey here with us today. But thank you to JobAdder, to Ayers Group, and to A Positive, to DigitPro, and to William Buck, who are talking with us today. And as always, please feel free to reach out and talk to some of these industry suppliers, because they're in front of so many recruitment companies and they will pick up a lot of unique information, ideas, and lessons learned on operating high-performing recruitment businesses, which is what Captain's Table is all about. So please make contact with them. But welcome to our session today, Financial Opportunities for You and Your Businesses. We're very pleased to have William Buck with us today. As you know, William Buck are a very professional accounting firm that operate nationally around Australia. If you ever get the opportunity to do their William Buck Hour, I highly recommend it. They did it for me as a test on my business, on my management consulting business. And it was a real eye-opener and really helpful, and gave me some really good focus of what I've got to do from now until the end of my journey, which is coming up much sooner than I would like. And I'm sure a lot of you are in that position as well, that we've got to make the most of where we're at and really benefit from our time in the industry. So I'd like to pass you over to, we've got Cameron in Sydney, we've got Angela in Brisbane, and we've got Dinah in Melbourne. And between the three of them, so today you have not one speaker, but you have three speakers who are going to be sharing a lot of great information with you today. So if I can pass over to you, Angela, who's driving the presentation. We look forward to hearing from you. If anyone's got any questions, please put them in the chat box and we'll cover them at the end of the presentation. So over to you, Angela.
Great, thanks, Tony. Just bear with me a minute while I share my screen. Hopefully this works. Thank you. And from beginning, sorry. All right, I hope everybody can see that.
Okay.
Excellent. Well, thank you very much for joining us today. We are just going to go through unearthing your financial opportunities for you and your business. We are presenting in three segments. Oh, hold on, before I do that, as Tony mentioned, we are a national firm, and not just in Australia, but we've also got 2 offices in New Zealand. And while we don't solely look after recruiters and recruitment businesses, between the three of us, Diane, Cameron and myself, we look after a number of recruitment businesses, and we have a wealth of knowledge, and we cross-collaborate a lot. So at a minimum, once a month, we get together and go through ideas, discuss any issues we face with our clients and try to nut them out. So that's the beautiful thing about being part of a network. Cameron, as Tony mentioned, is based in New South Wales. Diana is based in Victoria, and I'm here in sunny Brisbane in Queensland. So by all means, reach out to us. We do offer a complimentary consultation or a second opinion if you require. But also, please bear in mind, any information we're giving you today is on a general basis. Please do not take it to the letter of the law. Go speak to your own advisors and get your own advice that is in line with your own business structures and your own circumstances. So to kick off, what we're going to cover today is a quick federal budget overview, which Cameron is going to present on. Then I'm going to go through some year-end financial considerations, and Diana's going to bring up the tail, looking at a personal and business health check and a few of the key areas around that. So I am going to hand over to you, Cameron.
Thanks, Angela. It's great to be here and to be talking to everyone about what's going on in the finance landscape at the moment, and in particular what things will be relevant to the recruitment industry. In terms of the budget, I'd say for accountants that the funnest day of the year is usually the end of financial year. The second is probably budget night. This year the budget was quite different to other years in that there wasn't a huge amount of tax changes that we normally see. There was definitely some big spending going on, but not a lot of tax changes, which isn't a bad thing in terms of no major tax reforms. But yeah, there was definitely a big key in relation to some of the spending and some of the deficits that we're seeing. So the next slide. So I'll quickly go through today. I won't dwell on things too much, but I'll go through some key statistics. I'll look at some things in relation to jobs. I'll look at some capital expenditure policies, and then I'll go on and talk about policies that are focusing on women. So the next slide. So in this budget, as it's probably been publicised and most people will be aware of, there was a massive deficit, in relation to COVID-19, the government spending their way to get us out of this position we've been put ourselves in, or we've been put in, sorry. And in particular, there's a big focus on jobs. And so they're continuing to spend money in line with the idea of creating jobs, and with jobs that will become, lead to people paying more tax and hopefully then a better and stronger economy. In terms of other key rates there, in terms of the budget, they're predicting the US exchange rate still going to stay quite high, which has an impact on revenue, and then particular oil and iron ore, which also have a big impact on the budget and how much money we're expected to sort of bring in. So next slide. As you may have already been aware of, and some of those announcements in the budget were around in relation to international borders, and that has a big impact on employment and potentially the ability to attract staff. So in that budget, there was an announcement along the lines of there won't be a huge amount of international tourism till at least mid next year. And we're working on the basis that there won't be any more state border restrictions or lockdowns, although with what's happening in Melbourne at the moment, we'll see whether that continues. We're also seeing that the unemployment rate, they're forecasting, is to remain low. At the moment, around 5.5%, going down to 5%, which is historically very low, and particularly coming out of a period of sort of uncertainty and a period where we've gone through a lot of change. It's quite surprising, and I think that's the main result of the government spending all the money to get to that point. I think for the recruitment industry, one of the key takeaways there is that employment is going to remain low. There's going to be a skills shortage. There currently is a skills shortage in a lot of industries, and the ability to continue to have a skills shortage will lead many employers to realise they have to call on a recruiter to try and attract staff. If there's lots and lots of unemployment, or there's lots of people looking for jobs, employers can probably work out themselves to attract those sort of people. When the job market's tight, that's when recruiters really come into their own and really work. So from that point of view, I'd be forecasting continued growth in those perm and contracting businesses as the skills shortages continue. So the next slide. So as I said, there was a big focus in the budget in relation to jobs and job creation. In particular, things like apprenticeships, skilling people up with some digital skills to help them get jobs, and also into aged care. So the government focus at the moment is on trying to have what they would call full employment, or at least close to that as possible. And they're thinking with that will drive growth, which will drive taxes through employment, and we'll get out of it that way, rather than the other option, which is to start taxing, which is going to have a detrimental effect. So a lot of these things will encourage people to employ more people. With all these apprenticeship places, you're likely to see businesses out there looking to employ people because of the incentives, or in this case, the 50% subsidy that's on offer for businesses. Particularly in relation to aged care, there's going to be a lot more extra places and a lot more money to fund that coming out of the Royal Commission. So again, that's probably an area that if your recruitment business is focusing on that health aged care, you're most likely going to see an uptake in demand and growth in those sorts of services. We're also seeing in our client base and in the market that the tech industry is still going along really strong. A lot of big organisations like banks are spending money on improving their technology, and on that basis, there's still a continued skilled shortage in that area. Having the borders closed is actually then making that worse, because there's no migration, there's no skill migration coming into Australia. So we're likely to see that skills shortage get worse as we go along this year, before hopefully the borders start to open up at the end of this year or early next year. So next slide. So in relation to some key takeaways here, there's also a lot of money being spent on capital expenditure. So there's apparently $15 billion of new money going into additional projects. That's also going to drive employment and drive growth in those sectors. So again, if you're targeting as a recruitment business, particularly a contracting business in relation to that blue collar trade sort of area, you're going to likely see growth or continued demand for those services as that money gets rolled out. There was another announcement in relation to the manufacturing innovation, which this new patent box. And so what they're referring to there is that there's an extra or a tax incentive or a reduction in the company tax rate down to 17% for businesses that invest in this manufacturing area, and in particular the medical and biotech sectors. So I think this is a really interesting, a good step, and hopefully it is successful and they expand it into other areas. In the past, we've sometimes lost some of these really good quality businesses to overseas countries that have targeted them and looked at tax incentives for those people. The other two key takeaways here, which Angela will cover off in the year-end tax planning stuff, is in relation to immediate asset write-off and the loss carryback, and they're actually quite intertwined. The government's announced an extra 12 months to be able to access those incentives to June 23. And the main reason for that is to allow businesses the chance to actually think about what they're going to do. The next area of focus of the budget was around women and policies focused on women. Some of these things were announced pre-budget, but in particular, there's a lot of money going into childcare to help people get back into the workforce and work more hours. And that's particularly going to benefit women who are currently working part-time, and there was no incentive to continue to work to go back full-time because of the loss of subsidies. There's a few other things in relation to superannuation, which is, and the reason it's related to women is that women in the past anyway, because of some of these childcare restrictions, tended to work more casual roles, and the removal of the $450 a month super threshold will be well received by those people who under the current system wouldn't have been able to get access to super. That will probably then result in change in systems that you might have to be able to capture that data to be able to continue to pay people on those wages and pay those super. There's a few other things there which I won't go into, but a lot of them relate around the media attention that's been in Canberra in relation to women and sexual harassment in the workplace and the like, and there seems to be some funding for quite a few of those different things there. So hopefully that was a bit of a flavour for what was in the budget. If you're interested, there's more information on our website. We also held a webinar on the federal budget a couple of weeks ago, and there's a recording on our website of that if you're interested. But I think the main focuses are in relation to jobs, and I think with that skill shortage, that's going to help the recruitment business further. So over to you, Angela.
Thanks, Cameron. There we go. Sorry, just catching up with me. All right, so that was a great summary. As Cameron mentioned, feel free to jump on the website, or if you've got an interest in the recording of the webinar that was held on the budget, just reach out to Tony and we can send him across the link to send out to everybody. So now on to tax planning opportunities. So we're now in the last week of May, so there's really only just over 4 weeks left to do anything if we can. So we thought we'd just go through some opportunities that have that are present that you might be able to take advantage of in the lead up to 30 June. So what we're going to go through is some temporary increases in the expensing of assets that you purchase, changes to the tax rates, both that are in existence right now and are proposed through the budget, superannuation contributions, the carryback loss rules for companies, and a few other considerations that I'll go through. So what happened during COVID? The government, or the ATO, wiped the limit on asset purchases for an outright deduction. So there used to be a limit in play that if you bought an asset, it needed to be depreciated. But what's happened now is you can buy an asset up to $300,000 or even higher and get an outright tax deduction for it. And that was due to end at the end of this financial year. That has now been extended to, sorry, it was supposed to end next financial year, but that's now been extended to 30 June 2023. So provided you meet the turnover test, which is under $5 billion, which would be quite easy to do, then if you need to spend some substantial amounts on computer upgrades or anything, you will get an outright tax deduction in the year of that purchase, provided it is installed for use in that financial year. And there are some exclusions, which are capital works, so what we deem as like fit out costs. So if you're fitting out a new office, then that will still be depreciated, and any leased assets. Also, don't listen to your car salesman or to your bankers. They like to tell you go buy a new car and you'll get an outright deduction for that. But there is what's known as the car depreciation cost limit, which for the 21 financial year, the current financial year, still stands at about $59,136. So if you bought a car for over that, you'd only get the first $59,000 as a tax deduction, subject to your logbook business use percentage. One thing to be aware with this depreciation is obviously if you're getting the outright deduction now, then next year you're not going to have any deduction, which is just something to factor in and consider. The option that's also there is where you've got a small business pool or a pool of assets, and that balance stands there, you can actually write off that complete balance as well in the current financial year if you still have that. But again, bearing in mind that you won't have those depreciation deductions moving forward. So if you're going to have a bumper year next year and this year isn't as great, it might be worthwhile holding off that deduction until the next financial year. But one thing to consider for companies, the tax rate for this year is 26%. Next year it's going down to 25%. So there is a 1% reduction. So it might be worth just considering and talking to your advisor and getting them to run some numbers to see whether it's worthwhile to do it now rather than later. All right, I've already mentioned the company tax rate has reduced to is currently at 26%. For the 2020 year, it was 27.5%. It's now reducing to 25% moving forward, and then ultimately it is due to go down to 24%. So it's great news for people who have, if you've got your recruitment business running through a company structure. Then also, in addition, the marginal tax rates for individuals have moved. So the brackets for the 19 cents in the dollar has gone up to 45,000, and the 32.5 cents bracket has gone up to 120,000 at the tail end. So there's a little bit of a tax saving there for everybody. In addition, the low and middle tax offset of the $1,080 has been extended to 30 June 2022. And if you receive cash flow boost in this financial year at all, just bear in mind that this is actually tax exempt, and so you won't be taxed on it, and it's free money for you, which is great. In relation to superannuation contributions, it has been announced that the compulsory component is increasing from 9.5% to 10% from 1 July 2021. And while the contributions, concessional contributions cap, so that is contributions before tax that are made to super, is unchanged at 25,000 for the current financial year. From 1 July 21, it increases to 27,500. The same is with non-concessional contributions, so that is after tax contributions that you make, has remains the same at 100,000 per year up to the 2021 year, and then it increases to 110,000. So if you do happen to have a little bit of cash lying around, then you've got also the option of using the bring forward rule. And what that basically allows you to do is put in 3 years worth of contributions in year 1, and then no contributions for year 2 and year 3. If you've had a sale of a property or something, a good way to get some of that money into your super might be that you contribute the 100,000 prior to June this year, and then use your bring forward in July to get another 330,000 in. So that's a potential how you can, if you've just sold an asset or something and have some cash from that, of getting it into super. Currently, up to the age of 65, you've got to meet the work test in order to put contributions into super. That is now being extended to age 67 from 1 July 2020. Which is a good thing, bearing in mind that any of the announcements from the budget, they are yet to be legislated, so they're only proposed at this stage. We've actually got to wait until Parliament sits and passes the legislation for it to come in. In addition, if you are salary sacrificing super, you may just want to have a talk to your employer or talk to your employees, if it's your employees who are salary sacrificing, to bring in the additional super that they may wish to contribute from that point on. Also, and it's actually on the next slide, we've got the catch-up contributions that are available. So what happens is that if you have a superannuation balance of under 500,000, and that's per member, so if you're in a self-managed super fund, if you and your partner, you and your spouse, you have 500,000 each under or are under that limit, then you have the option to make some additional superannuation contributions. This came in from 1 July 2018. So if you did not in the 2019 year make your full $25,000 pre-tax contribution to super, we can actually bank it for up to 5 years and then put it in one lump sum and obtain a full tax deduction for it, provided your superannuation balance is under 500,000. Now, due to COVID and the pandemic, it might be that your balance has slipped under 500,000. So it might be worth just having a look at, because while in the past you might not have qualified for that, you might actually be eligible for it this year. So that's a great way to reduce your tax bill if you obviously have the cash available to do that, bearing in mind the money is locked in super until you retire or meet one of the conditions for release. If you yourself have already claimed your maximum super, it might be a planning opportunity to look at your spouse and see if there's an avenue to increase their superannuation contributions. Then say, for example, if they haven't made contributions for the last 2 or 3 years, then in this current financial year, they could also put in about 75,000 themselves and obtain a tax deduction. Now, because you can bank this for about 5 years, it might not necessarily be worth putting the full 75,000 in if the tax benefit is only going to be up to 50,000. You might want to hold on to that extra 25,000 for the following year. So rather than doing it all this year, you can plan it out a bit. So talk to your advisor and they'll look at your circumstances and suggest the best course of action for you. Now, with the loss carry back rules, as Cameron mentioned, these have been extended to 30 June 2023. And what it basically allows is where you have made a loss in either the 2021, 2022 or 2023 financial years, you can actually carry back that loss to 2019 onwards. So it might be that originally when you lodged your 2019 tax return, you had a profit. In 2021, you actually made a loss. You can actually go back and amend your 2019 tax return to claim those losses. But you must have lodged your prior 5 years worth of tax returns, so you can't be behind on anything. So hopefully nobody in this group is that far behind. But it's just something to consider, where if you've had a bad year due to COVID or something, or for other reasons, then you may be able to go back and amend a previous tax return to make benefit of that loss. Just bear in mind that it's obviously limited to your income tax liability for the year and your franking account balance. So again, talk to your advisor, and hopefully they are talking to you in relation to this and whether it applies. All right, some other measures to go through. Bear in mind, single touch payroll is now, for those of you, if you're not already doing it, where you've had closely held employees, you must now be enrolled by 1 July 2021. If you haven't yet, please reach out to us or your advisor and get that set up. You can get a payroll as part of your software, or there's some payroll only softwares that can be implemented if needed. Now, prior to 30 June, you may wish to consider paying some bonuses to staff, especially if they've been really good to you during COVID and been working really hard for you and been very loyal. It might be a good time to look at paying some bonuses as a way of bringing forward some tax deductions. But bear in mind, where you are doing that to family members, the amount must be reasonable to the work they have performed. So it's got to be in line with market. So if you were not going to pay that to an external person, you're just doing it because they're your spouse, then just be aware of that. Obviously, as we say in previous years, always prepay any large expenses to bring forward a deduction in this financial year. Whether it's business related, or if you've got investment property or something, you may wish to prepay some rent, for example. Bear in mind though, with those sort of prepayments, you've got to keep up that prepayment strategy. If one year you don't do that prepayment, then you end up with a year where you don't have a deduction for that expense. Make sure that where you have companies or trusts that your businesses are running through, if you have been drawing money out personally for use, and that money is not reported in your tax return as income, it falls under what's known as Division 7A. So please talk to your advisors and making sure you've got written Division 7A loan agreements in place, that minimum repayments have been taken care of, just so you don't fall foul of the ATO. We are seeing a bit of audit activity in this area at the moment. If you have a self-managed super fund or a super fund and you're in pension phase, just make sure you are paying, taking out the minimum pension for yourself, or if you've got any family members, just make sure that they are. Where you have a trust in your group structure, whether it's for your business or your personal investments, just ensure that you've actually signed and created, or your accountant's created, your trust profit distribution minute. That must be signed prior to 30th June in accordance with the trust deed. And then that's basically, we generally hold a tax planning session with our clients, and we recommend that you have this discussion with your accountants to make sure that you're utilising those distributions to make them the most tax effective for your structure. Go through your bad debts, write off any in your business that you don't believe you are going to collect, reduces your income, therefore your tax. Go through your asset register and identify any old equipment, although with these new unlimited deduction rules, there should not generally be much left on your asset register to deduct, as it should all have been, most of it should have all been deducted outright unless it's fit out or lease expenses. And then have a look at your other expenses such as insurances, subscriptions, and that, if there's anything that you can prepay in across any of those. So they're kind of the key things to consider prior to 30th June. By all means, reach out to us or to your advisors to see if there's anything else that can be done, and even to get an estimate of your tax position so you know what you're up for in a year's time. So that's the year-end tax planning kind of taken care of. By all means, at the end, we'll answer any questions if you have them, but I am going to hand over now to Diana to go through a business health check with you.
Hi, everyone. Okay. All right. I don't have to do anything. Sorry. Hi, everyone. Thanks, Angela, for everything. Now, I'll be going through a few things that are a little bit different to what Cameron and Angela have been going through, and probably some areas that I would say are my favourites. We've all been through a really challenging time in the last 12 months, and I think we've been challenged from all aspects, mentally, emotionally, physically. And when I say we, our staff, our people, our clients. So it has definitely been a very, very tough year. However, it's been great to see the last couple of months, a lot more confidence in clients, a lot more confidence in staff, a lot more positivity. And I feel the beginning of probably what we're close to the end of a financial year that we're ready to put behind us very quickly. But I think this positivity and this change in frame of mind means that it's a good idea to stop and reflect and revisit a few things within the business, and also from a personal perspective. What I have seen with clients is a lot of quick, tough decisions have been made around various aspects of the business, people, technology, things like that. And I'm going to go through a couple of things that I have seen to be probably the hottest topics with clients and clients, different size clients in various industries as well. So I'll explore those a little bit, and then happy to explore with you later on anything else that you may feel you'd like to, you have any questions around. But I'll start with business risks. A risk is something that is always at the forefront of every business owner's mind. The three major business risks that I see a lot of people revisiting, thinking about, or wanting to revisit. Yeah, Angela, next slide. Perfect, there, thank you. Are cash flow, staff management, and relationships, and technology. Next one, Angela, thank you. Thank you. Now, I've got a few up here, and I could spend days talking about different aspects of cash flow, but cash flow has been probably one of the biggest challenges for most business owners, and a lot of quick decisions were made, dipping into personal funds, increasing mortgages, whatever it may have been, to keep the business afloat or to keep things going, to pay the staff, to keep everyone happy. Sitting back now and reflecting and revisiting those is extremely important. Talking to banks, getting better deals, better interest rates, for example, is definitely something that people are doing more of and should be doing more of. We've got tighter and better cash flow reporting. Some people, business owners, realized that maybe their cash flow wasn't as good as they thought it was, and that maybe that they needed to have a better backup plan that didn't expose personal assets. So additional reporting can be, for example, I've seen emails that go out to the key people within the business that say the weekly cash flow, cash collection, needs to be this. So it's keeping cash flow at the forefront of everyone's mind and realizing that it is an important part of every business. Budgeting as well, revisiting budgeting and creating, worst case scenarios and making sure that you have a plan to help you through those worst case scenarios as well. I mentioned before, just revisiting any particular bank facilities or finance that you may have set up, shopping around now, getting some better deals. Personal funding was something, as I mentioned, very common, people dipping into personal funds. But I think it's important to sit back now and say, well, how do I get that money back? How do I get out of the business and back again? And obviously, it depends on where your business is at, but it's important, I think, that you have a clear goal and a clear plan on how to achieve that. We had some businesses realized how important their relationship was with their landlord, and now thinking, okay, I need to establish a good relationship with my landlord, or strengthen my relationship. So if ever times are tough, that we've got that open communication. So things like that. Now, the next one is staff management and relationships. I think we've all realised, and I know myself particularly, how important staying on top and staying in touch with staff was while working from home. And from what I hear, there's still a lot of businesses where people are working from home. And, we personally received a lot of feedback on a regular basis. We need more from staff, saying things like, we need more support. We want you to ask how we are, a bit more often, and make us feel important. And these are the things that, now is a good time to revisit and how do we make sure that we continue to show that care, that culture of care, that we're there to support staff, that we have, open communication, that we've got forums in place where staff can actually, have that open and honest communication. So, you make sure that expectations are met. One thing that we as a business do, and I've spoken to a few business owners about, is doing some sort of, group activities where, you build, you do everything you need to build that high performing team. And it's whether it's an annual thing that you revisit, and it can be a really scary thing as well when you're creating a forum and, and encouraging that open feedback. As a business owner, sometimes getting that raw feedback is not easy, but I think we all realize how important it is to make sure that we are having that communication so that we're all happy and we're all, successful in achieving all our business and personal goals as well. Things like, I'm seeing a lot of people talking about things like, starting little social committees to make sure that, people are continuing to connect. Working from home was quite tough. People get carried away and they're working away and forget to ask, how you going, or just forget to in a way, what socializing is like as well. So I think introducing something like that can really help to strengthen those relationships with people. Mentoring programs are really good as well. You can have a key owner, business owner with different staff, or managers with particular staff, or finance person with staff, meeting on a regular basis and having that open communication, and really asking what can we do to support you, what do we need, things like that. And I think one of the biggest things has been that developing some sort of working from home policy. We specifically here did a survey where we wanted to find out a little bit about what people's thoughts were about returning to the office full time, or how that would work now that they'd been working at home for so many months. And we found that a lot of staff, and again, it varied. Some staff have young families, some staff have got older children, some travel an hour to 2 hours a day. But the general consensus was that they enjoyed working from home, or some sort of having the capacity to work from home. So that in itself is a huge thing that to govern, I guess. But developing a working from home policy, is vital to make sure that you're listening, but there are clear guidelines around how that would work. Yep, we're happy for you to do it, but these are the guidelines, and this is how it would work best. And even with things like soft skill training, looking at maybe offering some training around mindfulness. Mental health has been a real challenge for a lot of people, and probably for most people. Creating some sort of training network or training support or support services to help staff deal with those those tough moments, I think is very important, and shows as a business owner that you care. Now, on to the third. The third most common risk area, technology. Now, definitely, if you ask me, I don't know much about technology and I'm not good at it, but technology has definitely been a really big challenge for professional services, particularly in various professional service areas. working from home. They weren't set up originally, and then having to work from home. For some, it was very easy. It was already there and it was already happening, which is fabulous. For some, it was, training, setting up training. So we're working from home now, and we're using a lot of different platforms. We're on Zoom, having meetings, Teams. How hard was it? How difficult? How challenging was it? Do we need to train? Do we need to look into different platforms to better do that? Is this going to be a part of our future? We're having a lot of conversations around, if we're going to be working from home, obviously we need to look at the best platforms. People have certain views about particular platforms as well, or like or don't like. And if this is going to be the future, it's really important that we're thinking about these things now and we're getting these things set up, because I feel that that whole working from home is something that we're going to have to and will be adapting as we move forward. Now, I think I've covered everything in the risk areas, but basically, in summary, risk is something that we face on a day-to-day basis from every aspect. And it's really important, I think, to stop and to reflect and revisit plans that you have, to minimize that risk. Really important. Okay, Angela. So now the next two parts are going to that next step. So the business across to personal. And I think it's really important that business owners look at their business and their personal group together, because there's a lot of crossover, and I guess basically it's really important that you have, or you create a structure that, for example, in this COVID period, a business that wasn't doing well and didn't have much income coming through, that owner needed to rely on resources, on funds outside the business, and having that structure in place, having those investments in place, extremely important. And those people that had that would have found this period to be quite easy and seamless. So I'm constantly chatting to clients around these things. Now, I'll start firstly with a succession plan. It's been quite an interesting periods when speaking to clients. Some clients have come back from this period and are ready to go and ready to grow the business, and they've got these plans on how to grow it and get to the next step. And then you have some clients who have come back and said, you know what, I work too much. I work too many hours. I need a better balance. And then you've got some clients who are like, you know what, I want out. I love being at home, and I've got some great hobbies, and it's time. I don't want to do this anymore. So it's been quite interesting hearing people's stories, but we've been doing a lot of supporting them in that next step and how to get to those goals. So, for example, where you have a client who's decided they want a better work-life balance. So they're looking at things like, okay, who are the people in the business that, that can take on some of my responsibilities. And I know this is something that, most of you probably discuss on a regular basis, year after year, letting go certain duties, stepping away from certain things. But it's, it's something that I think is very important, particularly if work-life balance is important for you and your family. That you to put a plan in place. So if you do have that person in the business that you think will be able to take on those particular duties, putting a plan in place, having that open discussion, asking them if they're interested in taking on, a bigger role, and maybe even potentially, becoming a business owner, or even becoming 100% business owner. So it's important to start having these discussions now. Where you have, with the I guess wanting to step away, this is completely step away. It's something that jumping on very quickly. It's important to jump on it very quickly. If you've decided that's it, I've had enough, it's time to go. There are lots of people who can assist in putting a plan in place on how to do that. So it's something that definitely needs to be thought about now. I think I've covered everything in terms of succession planning, and I know it's quite an interesting area, but and it kind of ties in with personal wealth management as well. A lot of people have been thinking about their wills. I know a lot of the estate lawyers were really busy for a period there. There's a bit of panic. People realised their wills weren't up to date. Their power of attorney paperwork wasn't up to date. And then it stopped, which is quite interesting to hear. But it's definitely something that I think when you're looking at the estate planning and the personal wealth management, it's something that I think it's important to revisit. So if the idea of what the next 5 years looks like has changed, it's time to sit down and revisit this. When looking specifically at your personal wealth management plan, you may already have a financial planner, and it's important to sit down and I think talk to them again. If your goals have changed, short-term, long-term, it's important to make sure that you have an investment strategy that supports those goals, and most importantly, help you to achieve those goals. And also, I think looking at revisiting the structure. So when you're planning and looking at different investment strategies, you're often looking at, trusts and super funds and all the benefits of having those particular structures as well. So it's a good time to think about, do you need a trust, or do you have a trust that's doing nothing, or do you need a super fund? Would that give you the best tax result to help you achieve, the financial goals? So lots of things to think about, but I think that it's really important that with your advisors that you are looking at these things now, that you're revisiting them. And if you don't have any plan, and it doesn't need to be formal, it just you need to have some sort of idea as to what the future looks like, and what the plan is to help you get there. But I think I've pretty much covered all. I'm happy to take any questions, but it's definitely an area that I can spend, and I know Angela and Cameron, we can all spend many hours talking about and sharing different stories. But Angela, back over to you. Thank you.
Thanks, Diana. Like Diana said, we're now open to take any questions that you have. If you've got to fly off, obviously we understand. By all means, reach out. As Tony said, he'll pass out our contact details, and we're happy to field any questions, no matter how small or large they may be. So always happy to assist members of the Captain's Table. So I'll hand over to you, Tony.
Yes, very good. Let's we'll leave your contact details up there for anyone that does have to go on the hour. But in the meantime, we've got a question from Peter Langford, tax question, which is, Angela, over to you. The purchase of software, is that an immediate tax write-off?
No, unfortunately not. Depending on, unfortunately, software is one of those things that's been excluded, unless it's like an ongoing licensing agreement that you have where you're paying your annual fees for it.
Would one way around it be to prepay the monthly subscriptions?
Yeah, I don't see why not. Yep. Okay. Cameron, did you have any?
Yeah, I agree. So the ongoing stuff is okay. And some in-house stuff, but yeah, unfortunately the rules for software are a bit complicated, so you probably have to check your exact circumstances, but definitely the subscription payments are all deductible, and so you could potentially look at paying 12 months of those in advance if that's something that that is possible.
Yeah, definitely.
Yeah, I think so, because most software is on subscription now anyway, isn't it? So yeah.
Just bearing in mind though, if you're paying 12 months up front, then next year if you're not going to prepay it, then you're going to have a 12-month period without it. So that's always a consideration.
Yeah. And I think it gets tricky when you're developing in-house software or customizing software. So that's where it gets tricky.
Mm. No, for sure. Okay, I've got a question from Catherine. What about I guess what she's asking is the deductibility of purchasing another business, the purchase price. How would you handle that in the current tax regime?
Unfortunately, that's not an outright deduction. That's very much considered a capital asset. So there'd be a portion of goodwill. There might be some equipment and that's tied up with that. So yes, potentially for that, you could get an outright deduction. And that's really up to the contract and how you wish to split between goodwill and the plant and equipment. But yeah, any goodwill component for the purchase of a business will not be outright deductible. It's definitely an investment on the balance sheet.
Okay. All right, that's good. So anyone that does have any more questions, because I've got a couple more to read out, but anyone that's thinking of a question, here's your opportunity. You've got three very senior experts here that it's unlikely we have this opportunity. So anything you can think of, and one that came through for you, Cameron, is at the beginning of your presentation, you started talking about, what's happening in the economy. With this huge deficit, what are some of the ramifications when the stimulus spending stops? What's going to happen? It just seems that everything's way too buoyant, given we've got this massive pandemic going on globally.
Yeah, I mean, it's definitely interesting as to what will happen, but I think the government's approach at the moment is let's put lots of money in there and spend lots of money to help drive growth and drive, spending on infrastructure. And at the end of the day, if everyone's in a job, then we're in a much better position. So economic downturns tend to follow periods of high unemployment, where what we're targeting here, which is quite unusual coming out of this situation, is actually really low unemployment. We're looking at rates, 5%, or potentially they're forecasting even numbers in the 4s, which a lot of people would talk about being basically full employment.
Full employment, yes. And I think the reduction in migration has really helped the full employment level too, hasn't it?
Yeah, definitely. And as I said, that if you're in a recruitment business, you want times like this when it's hard to get people, because that's when your skills are really invaluable, and that's when everyone's calling out because they can't find good people themselves.
Yeah, that's right. So the networks are going to be really important, and the access to talent and the access to the right talent, that's the best talent, not just whoever's might be looking for a job. Yeah.
Yep.
So,
and we're finding it in our industry in particular. We're looking for good staff and they're not out there, or if they are, they're getting obscene amounts of money thrown at them by like your big four and we can't compete with that. So it's very interesting times at the moment.
I think all the business owners and senior managers on this session today will agree with you, Angela. I think all businesses are finding this at the moment. It's really hard to get people to shift, and if they do, it's going to be for quite a big incentive to do so. Yeah. All right, and then there's just one more while we're waiting for any more to come through. Feel free to send a question through on the chat. Just going back, Angela, this was one for you, I think. For any losses, you said that any prior year losses can be carried back. And does that mean that if there was a profit in the prior year in which you paid company tax on, those losses that are submitted on that, when that past year tax return is resubmitted, those losses proportionally get refunded as a tax refund?
Yes, correct.
Okay. All right. That just was a clarification required. Okay, that's really good. So there's an ability to smooth out any difficult situations that have occurred or even might be occurring right now. Yeah.
Correct.
Okay.
Absolutely.
All
but
right.
hopefully recruitment's going gangbusters and we don't have those losses.
Well, it kind of is on one hand, but it's this this access
Shortage.
to talent that's really preventing it from doing even better. So, but anyway, and then there's one final one that is also got sent to me privately was, do you have any sector observations between the three of you? You understand our recruitment sector really well, but also you deal with clients from other sectors. It's very interesting to everyone to know which sectors are you seeing reporting really strong results and which sectors are still struggling?
So I find in my own client base, I'm finding that, for example, I've got a large fishing and tackle, not manufacturer, but supplies all your BCFs and that. 2020 year, this current year, he's going gangbusters. And that's because people aren't traveling. So they're spending money on boats. They're spending money on recreational. I'm finding because people aren't going on holidays, that's happening. Construction, renovations, those guys are doing incredible. As you probably know, if you're driving around the suburbs, everybody's raising their house and renovating it. And then the other one I've got is dental practices. There's just a lot of people are spending a lot of money, I'm finding, on cosmetic dental procedures. So, which, yeah, I think people got sick of staring at each other when they were working at home for like 6 months and said, no, you need to get your teeth checked out. But I find those sort of 3 groups, and I've got a couple of online clothing retailers who are doing really well as well. So they're kind of, and I don't know, Catherine and Diana, you probably have some others too.
Yeah, I'm seeing anything technology related for sure. Like if you've got anything that you're selling a software or you're in the technology space, you know, software engineers, developers, they're all really hard to come by because those industries are booming and doing really well. So I think as a business, if you're targeting an industry like tech or the like, you're going to be doing really well.
Yeah, and only another one to add is, unfortunately, the family lawyers have been doing very well on the back of this tough period that we've had. So again, that's an unfortunate thing, but yeah, they're very, very busy at the moment. So interesting times.
For sure. All right. Well, if we don't have any more questions coming forward, as we mentioned, what we'll do is if you have private questions, you can contact Angela in Brisbane, Diana in Melbourne, or Cameron in Sydney. Or if you're outside those areas, you could take your pick and have a tax-deductible trip to go visit them if you're outside those particular cities. And
hopefully don't get stuck.
Don't get stuck with border closures, which we've always got to watch out for. But you know, this technology is good. And this is why we've kept Captain's Table in this forum too, because if we started setting up face-to-face events again and then we have a border closure, it's an absolute nightmare to unravel when we're operating around Australia. So look, thank you everyone very much for attending today. And but particularly thank you, Angela, Cameron and Diana, for sharing those insights. I think you were able to really summarise some complex issues. I read the budget, what came out of it, and it just sort of, it was a bit of a blur, and you explained it in a much more succinct manner. So I actually do understand how it relates to a business. So thank you all for that. And thanks for your tips on planning and succession and on tax and everything financial. So I hope those of you that have joined us for the first time picked up a couple of good ideas to be able to implement in your business and also in your personal lives. And I like the way that you had that personal touch as well. So thank you for that. So in closing, thank you very much, the William Buck team. And there's a team behind these 3 that helped them come here today. There's a marketing team and there's colleagues of the 3 presenters we had today that were also very supportive, and some of them are on the call as well. So thank you all. William Buck, thanks for supporting us, and Captain's Table and the recruitment industry. Thanks to Digipro, you can see on the screen now also A Positive, Airs and Job Adder, who have also been making great contributions to Captain's Table, both in the form of support and contribution in terms of content as well. So before I leave you, last thing I want to say is we've got a very interesting next month's Captain's Table for you. We're going to be talking about diversification of service offerings. We are bringing in an expert that I actually used to work with at Manpower Group, Sue House, who is a specialist and expert in talent solutions. She understands the MSP, RPO, statements of work, all that solution selling that is relevant not just to large companies, but to small recruitment companies as well. So she's going to share a lot of information and knowledge on how recruitment companies can be diversified their offerings. So it's not just recruitment, but it's the full solutioning that it enables recruitment companies to sell larger pieces of long-term work. So look out for that. It's going to be on 30th of June. So it's a date that you're going to remember, and more details coming out on that soon. In the meantime, we'll be sending you a copy of the presentation today, a copy of the recording, and contact details for the speakers. Thank you very much, everyone, for being here today.
Thank you.
Thanks,
everyone. See you later.
Thanks, everyone. Bye.
Bye.